Right, so welcome back to Law and Crypto. I'm William Kraus, and I'm an attorney focusing on litigation, governmental investigations, and other disputes related to digital assets and blockchain technology. As always, this is your friendly bi-weekly reminder that while I'm an attorney, I'm not your attorney, so nothing I say should be considered legal advice directed towards you regarding your specific situation or investment advice by any sort, excuse me. I also need to make clear that my opinions are just that, my personal opinions, not the opinion of my law firm. And my comments are being offered for entertainment and discussion purposes only. Nothing I say is investment advice, and also this could be considered attorney advertising in some states. If you do want my opinion on your specific legal issue, please feel free to contact me and we can explore working together. And if you'd like to follow me on Twitter, I invite you to do so. My handle is @WKrausESQ. So with that out of the way, let's start our discussion. So today I'm going to talk about what is reported to be the first ever U.S. criminal prosecution of a digital asset insider trading scheme and the larger ramifications for individuals in the crypto industry, as well as some things we should all be thinking about. All right, so let's dive in. Last week, the U.S. Attorney for the Southern District of New York and the FBI announced the unsealing of an indictment charging Nathan Chastain, a former product manager at OpenSea, with wire fraud and money laundering in connection with a scheme to commit insider trading in NFTs. I'm going to pull up the indictment right now so y'all can see. There you go. Here's the indictment right here. It's out of the Southern District of New York, which is generally, a hub for higher profile prosecutions and litigation, particularly in the financial industry. And, real quickly, if you're not familiar with the term, or you're not quite sure what it means, excuse me, insider trading usually refers to something like a corporate insider, think like a CEO or someone who has access to confidential information, whether it's an engineer or maybe someone who just heard something in the boardroom, trading on the basis of material, non-public information. So the information has to be significant, aka material, and it has to be outside of something the public would generally know. And here, the U.S. alleges that Chastain was responsible for selecting NFTs to be featured on OpenSea's homepage. The U.S. further alleges that Chastain would buy dozens of NFTs he knew would be listed on OpenSea as part of his job responsibilities. NFTs would then be listed, usually spike in price, and he'd sell them at a profit, something like 2 to 5 times its money. Now, the U.S. further alleges that he engaged in this kind of activity from approximately June 2021 to September 2021, and gives some examples of the specific NFTs he traded in. They point, for example, to the spectrum of ramification theory NFT, and I'll get back to that later, which Chastain allegedly flipped overnight for 4 times his money. Now, the U.S. also alleges that he concealed his purchases by using anonymous OpenSea accounts instead of one he had in his own name, which ultimately sort of connected the dots, according to crypto Twitter, and paid using multiple anonymous Ethereum addresses. So for these reasons, the USAO, U.S. Attorney's Office, is alleging that he committed 1, wire fraud, and 2, money laundering. Now, to be clear, there is an inside trading account here, and I'll explain why in a little bit. So why is this interesting? Well, I have a couple of reasons. So first, let's talk about how this came about. I had mentioned Twitter briefly, and as you may have heard, and actually I do remember this coming out around September of last year, seeing these tweets. It was actually crypto Twitter that made the allegation, at least as far as I know, initially, that Chastain was flipping NFTs before they're being listed on OpenSea. So scroll over here, this is, I think, one of the first, if not the first tweet about this. Hey, OpenSea, why does it appear Nate Chastain has a few secret wallets that appears to buy your front page drops for their listed, sells them shortly after, and you've got one of these, and this is pretty much an immediate shot across the bow for OpenSea and started crypto Twitter doing what they do best, which is, investigating this further and discussing it. And others sort of came into the fold. You have this, I mentioned the ramification theory, spectrum of ramification theory. That's a great name. Here, this particular tweet is talking about, the specific address that held Chastain's CryptoPunk, and then the connections, or at least the connections that are alleged between these NFTs that were sort of being bought pre-listing. So, all this is fascinating to me. I mean, you have crypto Twitter basically able to leak the activity at issue through his primary wallet that was known to the public to be holding his CryptoPunk. And, sure enough, you go to his account here on OpenSea, click Nate Chastain, his account, and there's his ERC20 address, joined May 2021, And then you have others carry the torch further, analyzing blockchain purchases and sales of NFTs and the movement of ETH between the various addresses alleged to be controlled by him. And you can research the rest of the story, but the fallout basically just continued. OpenSea creates policies, there are some statements that are made, and ultimately we got this unsealed indictment. So let's deconstruct this all a little bit. To start, here you have a criminal investigation that seemingly came about as a direct result of allegations being made on crypto Twitter. Now, does that mean everything on CT is legit and will lead to investigations? No, of course not. But if you would have told me 10 years ago that we had criminal prosecutions, federal prosecutions coming about regarding things that were written on Twitter or social media, Facebook or whatever at the time, I would never have believed it. But here we are. Needless to say, I think this is just another development, however, showing the increasing sophistication and market knowledge that the US government has now in investigating and charging crimes related to the crypto industry. The takeaway here is they're out there reading the same tweets we are, looking at the OpenSea front page, interpreting the blockchain records. And when, like happened here, there's a big splash that's made about some alleged illicit activity, if it's in their jurisdiction, they're going to investigate. So if the allegations are true, then Mr. Chastain, for his part, appears to have essentially hung, a flashing sign around his neck, flexing his crypto punk, and it took the internet just a few steps to connect him to something that will have him facing potentially life-changing prison time. Second, the nature of the allegations here are significant. I'm going to pull up not the indictment, but the press release here. And as I mentioned, the press release here claims this was the first ever case with regard to prosecuting a crypto inside trading scheme. As far as I can tell, that's correct. And it's interesting thinking about sort of the arc of US regulatory and law enforcement action. I think it's fair to say that at least in the past, there have been claims of market manipulation, and that's been around for some time. And I think there's a pretty good argument to be made that that actually was true, at points in time. In bits and pieces, the US has investigated that, say, through the CFTC over the years, and without getting too much into the nature of these cases, what underlies them is sort of this common thread about the need to protect the investing public and ensure that the markets operate fairly. That's this kind of case. I see this as sort of like an expansion from the little bits and pieces of, market manipulation and fraud that the US government has been investigating and taking action with regard to over the past couple of years, and kind of expanding into this realm of more traditional white collar crime like insider trading. Insider trading was, famously associated with a lot of, well-known prosecutions like Martha Stewart. And more importantly, the US government has made clear, and I've talked about this at length in this show, that they are cracking down on illicit activity that poses a threat to very specific, areas, right? They are very focused on things like sanction evasion, and they're very, very focused about protecting retail investors or the investing public. Insider trading poses a huge risk, as I see it, to the investing public, because it essentially capitalizes on information the public could not have access to and uses that information for personal profit of the individual or group of individuals with that non-public information. So like I said, I expect we'll see more of these for what it's worth. Without naming names, and I'm not the first person to flag this, but I definitely have seen it before. I've seen allegations that there are certain, tokens, token X, token Y, that are being acquired pre-listing, before an announcement's made on certain prominent exchanges. And, in that situation, just like with NFTs, we're seeing individuals that are profiting handsomely from purchasing X token when it was 0.0000001 cents to, whatever, only 4 zeros, and they go and make a lot of money when that listing occurs. Now, if that was happening in the US and there was a US touch point, such that there could be an arguable, case to be made against somebody, I think it's fair to assume there's some sort of criminal prosecution, not prosecution, but criminal investigation, at least going on in the background around that sort of thing. And like I said, we're going to see a lot more of these first evers. We're seeing old laws and new technology kind of merging, particularly with regard to those hot button topics I've been talking about, like protecting investors. Third, I think this is intended to show the reach of the US government in terms of how they can actually criminally prosecute illicit activity in crypto. So as I mentioned, the indictment doesn't really charge Mr. Chastain for a crime of insider trading. And in truth, there's not really a civil or criminal crime for insider trading, or rather one that says, this is insider trading, don't do it. Rather, what we have are laws that are sort of more general catch-all prohibitions, like the ones being used here. I'll briefly explain because I think it's important to keep in mind as it relates to this case. So let's take the CFTC. CFTC has sort of aspects of the Commodity Exchange Act, the CEA, as well as regulations promulgated under Dodd-Frank, like 180.1 or 180.2, and the SEC has its own, equivalent, for example, Rule 10b-5, which are broad prohibitions related generally to manipulative or deceptive devices. And it's sort of this idea that you're engaged in some sort of manipulation or fraud, or you're omitting something and you should have said something, But it's like these broad sort of rules or regulations or laws that just catch all sorts of stuff like securities fraud, such as insider trading. Now, of course, if we're talking about CFTC rules to apply, you're going to have a commodity. If we're talking about the SEC rules to apply, you're going to have a security. Now, as a larger policy note, I think it's important that this indictment isn't taking any position at all on whether NFTs are commodities or securities, because what they're saying here are this is just bread and butter, wire fraud and money laundering. And I'll explain this a little bit more, but they're not relying on the securities laws, the commodities laws. And, truth be told, there's jurisdictional considerations there. The case isn't being brought by the SEC, the CFTC is being brought by the DOJ through the US Attorney's Office. But it's important to say that they're sort of walking a line here. They're not sort of doing what is, in vogue right now, which is trying to pass judgment on what an NFT actually is under financial laws. So, and also they're saying, it's insider trading scheme. I'm looking over this indictment, and they're not really though making the pure insider trading, theory, right? Like they get a lot of it. It kind of sounds like insider trading, but there's, weird sort of aspects of it that sort of suggest they kind of like the language, but, they're not really, bearing out a great inside trading claim here. Again, it falls back on wire fraud and money laundering. So I click over to the indictment. Here, like I said, the DOJ is charging two crimes. First one up front, count one, is wire fraud, which is an extremely broad statute that basically makes it a federal crime to use a wire communication like the internet to advance a fraudulent scheme. And I'm simplifying a bit, but in short, the crime is not that you tried to con somebody through some scam, it's that you use the phone, email, or a website to do so, and then boom, you might have wire fraud. Now, given how often this comes up using the phone or internet or email or whatever, further into the fraudulent scheme, we see wire fraud all the time in federal prosecutions. It's very, very, very common to see with regard to white collar prosecutions and allegations regarding internet crime, credit card fraud, identity theft, phishing, whatever. And here, something closer to securities fraud, not quite there. And this is nothing new, but it just bears repeating that bad things that are done in crypto very well may fall under laws like wire fraud, which I should add carries a penalty, maximum penalty of up to 20 years in prison. As an example, in the indictment here, the crime that Mr. Chastain has been charged with was advancing an alleged fraudulent scheme through the internet. In this case, buying and selling on internet site OpenSea. Next, you have the second charge here of money laundering. And truth be told, money laundering, I'm going to scroll down so you can see. And money laundering isn't the first thing that comes to mind when you listen to these claims, right? It's not like he's describing, they're using this mixer, or this is like some front from the mob or whatever. But it's kind of this interesting piggyback claim. If you look at this, the way that this particular provision is worded, what's happening is they're basically saying that in doing the wire fraud, right, that there was this aspect of trying to conceal the activity, which then gave rise to the claim of money laundering, the concealing of the proceeds of the unlawful activity. Now, Jason Gottlieb, who's a much smarter person than I, actually noted an interesting sort of hitch here, namely that money laundering, traditionally has to do with what happens after the proceeds are gained. So say you've gone and you've, robbed the liquor store, and then you take your money, to the casino and you launder it that way. What you don't usually see is things talking about the steps that were taken beforehand to conceal the purchases. So the money laundering in this way is kind of at the wrong side of the crime. Whether that's actually a bar to prosecution, time will tell, but it definitely makes this atypical. But whether on a large scale or a small scale, if you're trying to hide where money was obtained through illegal activity, you might be running into money laundering. So again, I think that poses some interesting considerations for the crypto world. I mean, if someone is out there engaging in illicit activity and trying to cover their tracks through chain hopping or using self-custodied wallets or whatever, that might tack on a money laundering felony depending on the circumstances, in so much that there was an effort there to conceal and disguise what was going on. And I mean, I think that's an interesting question. You're looking and you're going to have to ask, okay, he was alleged to use, anonymous wallets. I use an anonymous wallet. He was using a self-custody solution. I use a self-custody solution. His account didn't have his name on it, whatever. Are those things in their own right going to be sufficient for money laundering? No. I mean, again, they have to be sort of a piggyback, right? It has to have an underlying crime, and then you're taking the proceeds of that illicit activity. So you'd have done something wrong already. If you're just going and using your self-custody wallet on its own, it's not going to be enough. But it's interesting to keep in mind, right? You have that extra step here of trying to cover your tracks, and that's what gives rise to the second felony. It's also interesting to think about how wire fraud and money laundering counts are being applied here. Time and time again, I hear, crypto is lawless, crypto is unregulated. In fact, it was like a week or two ago. I remember seeing some headline, it was out of Europe, financial minister or something like that. Anyway, the point was he's basically like, crypto is lawless. And, crypto, it's sort of a question, right? Like, is crypto really lawless if you see these kind of prosecutions? I mean, I think it kind of misses the fact that the laws are out there, right? Like, it's just how they're applied and whether they've been applied aggressively to date. Now, you might not have something that says, okay, well, crypto insider trading is X, but here, even though you had what sort of wasn't pure great inside trading, you were able to go and have a federal prosecution right on the backs of federal wire fraud and money laundering counts that are as old as time, essentially, or at least, as long as there've been wires, but I mean, very old, very well-established claims that, work very well to cover this kind of underlying activity. So is crypto really lawless when, the laws are out there to prosecute this kind of thing? I don't think so. And, I think that's it. So in sum, I think, one, government's on Twitter and they're paying attention to Discord and they're looking at the same things you're looking at. And, you shouldn't think that just because you're out there tweeting that, nobody's going to pick up on it. Generally not a good idea to put anything in writing you don't want someone else to, use against you one day. Two, we're going to see more criminal prosecutions, I think, sending a message to the market traditionally, or specifically, where they relate to sort of these higher, priority areas like protecting retail investors or, preventing evasion of sanctions. And then three, and finally, crypto is not lawless. People just are starting to recognize that laws implicated by certain activities of crypto can be applied here. And that's what I got for you today. Hope you enjoyed the show, and I will talk to you in 2 weeks.